Good morning, good afternoon, good evening. Welcome to Market Sundays. And do I have a good show for you guys today? Okay. I am calling in from the West Coast, which is saying a lot these days. Uh, Couple things I want to cover before we get to the show, or what we're going to talk about today. So, what we're going to cover, let me see. I want to get into this interview from Delta CEO because I think it covers some insight on what's going on with the economy. I want to talk a lot about Disney's acquisition of Fubo TV because that has implications on what I'm doing over here. And I want to get updated on the downfall of TikTok, and then we're going to also talk about the Fed, the impact, expectations, economists, and things like that while we're paying attention to what's going on in the economy. So I want to look at that and start to see what to expect as the year continues to play out and further and further and further. Give you some ideas of what I'm looking at, what I'm thinking about. Write this down. And that's what we'll do. All right. So hopefully everybody's in a good mood. Happy New Year to everybody. I ain't really been streaming at all much because, I couldn't explain it to y'all. It's just I've been taking some time sitting back and just chilling. It's a new year. I'm actually extremely busy right now. I actually don't like that, but that's life. And so eventually I will get back into the thick of things. I know I've been saying that for a few months now, but I feel that's the emotions that I will be able to eventually figure out how to get everything back. I just have to figure out where I'm going to scale my time away from again. So we'll get there. Shout out to my dog in the building, Mr. GBGville himself. Appreciate you, bro. Always supporting the show. Appreciate the love. Happy New Year to you and everybody in the building today. It's Sunday, which means it's football today. So I will not take up all of your time. I want you guys to be able to enjoy your football. But I also want to talk about things that I think can be very helpful for all of us as we move forward into this new year, new opportunities. And we're going to touch on those things today. All right. Those are important. First thing I want to get into is the basically the jobs reports, the Fed, and how I'm starting to see things shape out. And what I would say you can probably expect as we go forward while there's market uncertainty. Okay, I'll say that word, market uncertainty, and how we go forward from there. So the first thing I want to look at today, well, don't get me wrong, let me just say this. I've been buying more Nike. I'm gonna just say that now. Bought a few hundred more shares of Nike as it's been falling down to like $71 or whatever the case is. I'm going to buy some more, especially if it continues to fall. It's just for me, I believe it's a good opportunity. And I do like turnaround plays. I am one of those type of people that like turnaround plays. That's why you can see I'm in Disney, while I was in PayPal. I like those opportunities when it's a business that's easy to understand, has the capital, has the brand, and I believe has the leader to execute the turnaround. So those plays are something I'm looking very deep into. And the market is it's a lot going on. That doesn't mean like one company that I would be terrified to touch is Boeing. Boeing is something I'm terrified to touch, even though they have a monopoly on the whole industry, especially here in the Americas. But just something about that business and how they just struggling, and just can't turn the corner in the way that they just burn money. But unfortunately, they have so many back orders and so many government contracts that they are eventually going to turn around in my estimation. But I'm just watching them from afar right now. And that's what's going on. Okay. So let's start here. Okay. I want to start here, and then we're going to get into an interview about what's going on with the Fed. Okay. So let me pull it up here. I don't want to start there. Not there just yet. Let's start right here, because I think this is actually good. So first thing I'm gonna start with is, as crazy as this sounds, the impact of what the Fed's got going on, y'all. Mortgage rates. Mortgage rates and on the jobs.
Mortgage rates are moving higher on the back of the move in the 10-year once again. Diana Olick, where are we now?
Well, Kelly, we are much higher. Rates have been rising since the start of this year, but today was a big one. The average rate on the 30-year fixed rose 9 basis points to 7.24%. That, according to Mortgage News Daily. And that was, of course, after the hotter than expected jobs report. Now, that is the highest rate since May of last year. And just in the past 6 weeks, we're up 66 basis points. And from the most recent low in September, rates are up well over a full percentage point. So, okay, here comes more math. If you are buying the median priced home, which is around $400,000 today, and you're putting 20% down on a 30-year fixed, your monthly payment, principal and interest, is now $239 more than it would have been just back in September. And home prices, of course, are still higher than they were a year ago, although the gains are shrinking. But there's more supply on the market, and that's not because people are listing their homes. It's because homes are just sitting much longer on.
Now, Hey, Adrian Nicole. Shout out to the lovely Adrian Nicole. Happy New Year to you. I have to just let you guys understand what this actually means. This is what it actually means, right? Mortgage rates have increased since September. After the Feds have already start to cut earlier into last year and toward the end of this year, they start to cut rates, right? 25 basis points, 50 basis points. And somehow, some way, mortgage rates continue to climb through the roof. Which tells me two things. One, it's going to be a rocky year for sure, because now the markets are responding to this data at a different rate that they were originally, and that the Fed has no idea what he's doing. I know that sounds crazy. That they have no idea what they're doing, and I don't mean that in the sense of they don't deserve the job. They have the education for it and all those good things. But what I'm saying is, when they tell you they went to school and they're an economist and all these things, totally fine. But it shows why the richest people in the world tend to not be them. We're not going to have a soft landing, guys. There is no soft landing coming in here, because you can see the Fed doesn't have any control of what's going on in the economy. What are you dropping the rates for? And mortgage rates are pushing through the roof. Home prices obviously are somewhat going up and stagnant, but there's no consistency around that. There's no actual projections that we can actually accept from them, because it's shifting too much. The Fed just doesn't know what they're doing in the sense of controlling this market and getting control back in the economy. And this also means that inflation continues to run rapid. And because of this, there will be no stabilization in the markets or in the economy just yet. You will see pricing still shift a lot up and down, back and forth. So I don't have an anticipation of getting a market where there is a softer landing. I think there's going to be a lot of volatility this year. And also, because we're still in high interest rates environments, because it's not impacting the right thing, I think the shift from towards equities that produce income or return a higher interest basically are going to be slower. So I thought it was going to be a little bit faster as they start dropping rates, because I'm like, okay, people are going to look for yield. The savings rates will drop, and then people will start to shift over. Well, as you see, we're still in such a high inflationary environment, and rates are not shifting in the areas that we have expectations for. So I think a lot of stuff will be slower to get to their angles. Okay, so that's what we're seeing originally. Now, so as we have the job reports come in towards the end of this week, the markets responded very differently than a lot of people might have expected them to. So we want to go over that real quickly, and then we'll jump into the merger between Fubo, Disney. We'll talk about the CEO of Delta. I think Ed Bastian is his name. And what does those earnings entail about what's going on with the rest of the economy as well? Let me pull this up here. Who's afraid to get on the airplane? Who is afraid to get on an airplane?
Joining us right now for insights on what the new jobs data could mean for the Fed and its rate decisions this year is Roger Ferguson, former Fed vice chairman. He's also a CNBC contributor. And Roger, tell me what the Fed thinks about this number.
Guys, before I let him talk, I have to say this. Boy, he looks awkward. Like, don't he look like a top of the line type of geek? I'm just saying. What like just an awkward geek. Just get. First of all, why are you smiling like that? All right, it makes me a little uncomfortable. When you smile, you're supposed to smile a little bit and show a little teeth. Just a little bit. All gums, old head, that's all gums. So we don't know what to expect from this man, but he has held a powerful position in our economy before, and he does have insight on what we should expect. And this is what we do when we reach to the pundits. Hey, Sherelle, how you doing? Happy New Year to you as well. As you know, I ain't been able to track me down on these YouTube streets. So shout out to Sherelle. Happy New Year. But yeah, I'm gonna be honest with you. He make me uncomfortable. I ain't gonna say it any type of way. Y'all isn't that a creepy smile? Just admit it. If he came in and he was like, oh yeah, I'm gonna no, I'm sorry. The glasses ain't enough.
I think the Fed thinks about it exactly how you've been talking about it, which is good news. The labor market that they had feared was softening appears not to be.
Nope.
Challenging news. The anecdote, the thought that inflation is going to continue to come down now is very much questioned. And I think, as I said the last time we were on, the probability of their getting off 2 cuts next year, or this year, seems to be very, very remote at this stage. So, good news is good news, and good news is challenging news.
Okay. What about the news that the 10-year is now sitting at almost 4.8%?
What does that mean?
Look, I think the 10-year and the bond market in general is doing what it's supposed to do, which is saying in this market where we are also expecting, continued private sector demand for credit, continued government demand for credit, both in the U.S. and around the world, the way that gets equilibrated is higher interest rates. And I think that's just a reflection of the market doing what it is supposed to do, which is telling, a supply and demand story. You're going to need higher rates to bring savings into these markets, and that's exactly what we're getting. So I don't think there's a way to manage that. I think that's the outcome of supply and demand stories and the way the market sees the future.
One of our guests, Allison, was just mentioning that this could be the new reality. Is this the new normal? Higher interest rates, higher levels, the 30 years almost at 5%?
That's a good question.
Look, I think it goes back to a point that I think Joe and I talked about a couple of shows ago, which is the elusive so-called R star, and is a so-called neutral rate higher because we have new demands for capital, because we have new technologies that might lead to greater productivity. And so perhaps we should get used to this, not because it's a bad thing, but because it shows that there's many, many productive uses of capital. And hopefully that plays through into productivity increases, which allow for companies to be more productive. So net, I think this probably is a new normal, and we should get used to the fact that we're not going to see a dramatic movement down in long rates anytime soon.
Did you hear that? Did you hear that? Okay. Now, have y'all ever noticed all of these people never seem nervous, never seem any? They must be doing so well that they don't care nothing. He like, yeah, it is what it is. Apparently, he just got enough influence around that he don't worry about nothing. But what he said that was key was, this might be the new normal. This might be the new normal. We're talking higher interest rates environments, which is discouraging for buyers. which to me, in a sense, says we're going to probably get to an even higher concentration of being a renter's country, basically. More people are going to continue to rent at this pace because the middle ground to buy is almost non-existent for the middle class person. You get what I'm saying? So if you're going to buy cash, what is a lot of foreign investors normally do, especially here in the Bay Area, they buy a whole house cash, drive up the bid, and they outbid everybody, and they buy it in cash, and they beat you. That's a common practice out here. Most people can't compete in that atmosphere. So if you're dealing with people that have the money, the Black Rocks, the Blackstones, cash environment, like no regular people are not going to get any homes anytime soon. So that's going to even push up the renters market even more. But as you listen to what he says, just about this is going to be the normal rates. If this is the expectation for what we're going to get in normal rates, and not to see an expectation of it shifting anytime soon, it sounds like we're going to be in a stagnated economy for a while, where people, once we get to a point where the buyers, people that are spending money, finally start to feel that pinch, then they're going to have a shift in behavior. Then we're going to see a big shift in the economy. But right now, it's a lot of money out there. You know, a lot of people were sitting on money because of what happened back in 2020. They're still spending money because of the holidays, not huge amounts of layoffs in all the different industries, you know. So it's a lot of money still flowing. But at some point, people are going to feel that pressure of higher rate environments, paying off their credit. All those things will start to materialize going forward. And I think it's going to have a huge impact towards the end of this year. And so it's going to play out a lot. So that's what we got to keep our eyes on, guys. Don't expect your eggs to get cheaper. Don't expect prices to stabilize. They're probably going to get a little bit worse as we go forward. Let's just be honest about that.
Should we also think that a new reality is inflation running above trend?
I think so. One of the things I've said, I think a few times here, is I've been quite concerned that inflation actually is as sticky as it appears to be.
It is.
Some of what's driving that is supply and demand imbalances in housing, for example, and it's really hard to fix that.
Yep.
You know, now we have an administration coming in that seems to be leaning more towards things that appear to be likely to be inflationary. And so, you know, the 2% target may prove to be elusive.
2%?
Or to put it another way, to get to the 2% target may require the Fed to really crunch the economy. And that is a tough trade-off to deal with at this stage, I believe.
Don't take rocket science to figure that. That 2% target of what we want inflation to be ain't gonna happen. Ain't gonna happen. They would have to do something extreme or radical on the far end of it to combat inflation at this point, because it's rapid. They don't have no control over it. So they would have to do something. They would have to take extreme measures to combat it, which would be extremely disruptive to the economy. And in my estimation, not something the new president is going to desire. The new president does not want this economy to be destroyed under his watch. So he's going to have a strong, even though technically the Fed don't have to listen to the president, you know what I'm saying? Even though technically he's going to have a lot of influence there, where he doesn't want his name attached to the destruction of the markets, because he's been using his name as saying that that's why the markets are doing so well. And so taking that type of dramatic stance that it would take to get back to that target rate, I don't think the Fed will have the support to do it, but we'll see what happens. But I just don't think it's going to happen, because I think there's going to be too much of an issue with politics. Okay. So that's what we expect, right? So we expect sticky inflation. We expect the economy not to normalize anytime soon. High inflation, high interest rates. We don't expect to get down into the lower 4%, 5% no time soon. So that means I'm not expecting home buyers of normal people, only cash buyers. I'm also have some expectations of eventually people being unable to pay for their homes. I see that happening as well. David says rebuilding LA will be an economic growth driver. Yeah, that will have some impact here on the West Coast. There's going to be a lot of politics involved with that. I'm going to tell you this. I see where I'm at. We are not impacted so much. We're not in the zone areas of that, but I know a lot of clients and people who are in those areas and businesses that are farther down that way. One guy, his whole house burned down. I was talking to him. He's like, yeah, I've been paying insurance for years. And then they found a loophole and then they don't have to pay for it. I'm like, dang, that's crazy. And this was maybe 7 months ago we had this conversation. And I'm like, they can do that? You've been paying insurance for this long? And he lost his Mercedes Benz, his wife's Benz. Man, they lost a lot in that, okay? And I didn't know that they can get away with that. I knew that they was kind of a little grimy on their methods, but hearing it from somebody, I was like, dang, that's crazy. Now we're seeing it happen all through LA, all through that region. Nobody's getting insured. So it's about to get a little crazy because there's got to be some liability somewhere. So we're going to have to watch how that plays out. But I don't know how much of a growth driver that will be as far as helping us with inflation. It might help with jobs, but I don't know as far as inflation and stabilizing those areas. I don't see that. But hey, if you're a construction worker, business might be booming. In unfortunate circumstances, but business might be booming. But man, oh man, that stuff is crazy, guys. Let's get into a little bit of what I like to talk about when we're watching the economy and we're watching for where we're looking for the shift and where we're looking for where we're at in the cycle, right? So you guys know we have the expansion. So that's when the economy starts to expand. Contraction is when the economy starts to contract. And then we have some level of stabilization. And then we run the cycles all over again, basically. So, right, I like to use a level of M&A, mergers, acquisitions, when you start to see markets stabilize because you see consolidation in the markets. That's usually towards the bottom. Right now, it's very hard to identify where we're at in the cycle because we have so many things going on. We had a once-in-a-lifetime situation destroy the economy. We have insane inflation at rates we have not seen for a long time. We have strong job markets, which is inconsistent with what is supposed to happen. So we have so many different things impacting the markets. It's so hard to stabilize it because they haven't picked one thing, stabilize that, because it's like the little seesaw thing that you're going up and down. When you try one thing, the other thing goes up. You try the next thing, the other thing goes down. So a lot of that is going on. But indicators. You still have to stay disciplined. You still have to use the indicators that we understand, right? And a lot of things that we talk about is consolidation, mergers, acquisitions, things like that. And what I found out recently is that your boy, Shaquille O'Neal, has been in business. Your boy, Shaquille O'Neal, has been in business, and they have conducted an agreement with a bunch of different brands to merge together. So, we like to keep our eyes on acquisitions, mergers, things like that. And this is no different. Now, check out. Now, shout out to this brother, okay? Dressed real sharp, nice tie, okay? Not as scary as the other guy.
I'm Conway Gittins reporting from New York City. Here's what we're watching on the street today. A group of retailers once left for dead are uniting in hopes of getting a piece of a U.S. consumer that's showing signs of life. JCPenney, the once venerable department store chain, is teaming up with Spark Group, which owns Forever 21, and Brooks Brothers, two specialty retailers far faded from glory. Other shop names included are Aeropostale, Eddie Bauer, Lucky Brand, and Nautica. This new retail conglomerate will go by the name of Catalyst Brands. In a press release, Catalyst says it now has a broad portfolio and will use AI to help meet the apparel needs of every demographic. Quote, Our relationships with more than 60 million customers and the deep data we have create a compelling consumer value proposition across our brands. This deal is risky, to say the least. All these stores used to be mall favorites when malls were all the rage, but then online shopping took over, forcing malls to the brink of extinction. Mall owner Simon Property Group and real estate developer Brookfield, however, are betting they can revive these once prominent brands. Both companies teamed up in 2020 to buy JCPenney out of bankruptcy for $1.75 billion. And Simon has been the financial muscle behind Spark's retail scavenger hunt. Simon and Brookfield stand to gain from even a modest mall resurrection. This merger at least gives these recovering retailers a head start with $9 billion in sales, 1,800 locations, 60,000 employees, and supply chain synergies to hopefully capture more sales than they did separately. That'll do it for you.
Whoo-wee. So, I don't know. I haven't been to JCPenney's in a very, very long time. Aeropostale, as they say, Forever 21. A lot of those brands are very, very cyclical, right? So they had their moment. They're trendy. They was popping. I remember Forever 21 was like a spot for a moment. And it's so interesting, right, guys? Because it really just ties into what I believe and why I'm such a why I have such strong conviction when it comes to Nike. I believe a lot of stuff is trendy, but there are just some things that are like timeless, as they say when it comes to music, right? JJ, what up? Yeah, JJ, I know I've been MIA. When it comes to music, right? They say certain music is timeless. You get what I'm saying? Well, I think that's Nike's brand. It's timeless. Like, no matter what cycle they're dealing with and trends that they're combating and fighting off, I think they're the timeless brand. Just like there's timeless music that you listen to the 1920s, 1930s, 1940s. Yeah, so nah, JJ, we ain't had no issues out here in SF. But unfortunately, there's been a lot of issues surrounding the surrounding areas, unfortunately, and a lot of stuff that's going on. So, you know, you just keep people in your prayers and your thoughts, man, because it's crazy. I haven't seen stuff like this in a long time. Like this stuff is crazy. But that's my strong conviction on the brand of Nike. I find it similar to those other strong brands that are just timeless. I see everything else as trendy, just like you see the Forever 21 as trendy. Those Rockin' Republics, whatever. I'm not big on that stuff, but all that stuff to me is trendy, and that's why those companies went out of business. Now it's a combination of they were at the malls, they didn't get the foot traffic, they got stuck with inventory, they couldn't move it fast enough. And the consumer changed faster than they were able to adjust. But if you're top dog, you top dog. You can navigate in any environment, and they couldn't. That's why it all went out of business, basically. But I think it actually shows you guys what happens with a lot of these companies. Like, they're never really done because they have their intellectual property. They still have assets. And what they ultimately do is they all just come together, change the company name, a private investor buys them, creates a new brand, and redistributes. And they might just put out new commercials and new advertising and get people excited again, Throwback Thursdays and stuff like that. That's why you got throwback jerseys was popping at one point, stuff like that. So that's trendy stuff to me. I just don't believe they have the staying power that Nike has. Now, Nike has a ton of competition, but I think that competition will eventually fizzle out. Now, one article I was reading about Nike's competition. Hey, Tam, how you doing? Happy New Year. Poppy Blanco, what's going on, fam? One article that I was reading about Nike's competition, which actually crystallized some things to how I see stuff, was actually funny to me, was a brand known as Skechers. I was reading over this article, right? And it was talking about the Skechers brand. And it basically was saying the person in sports basically was the top European goal scorer, and they weren't a Nike or Adidas athlete. They were in Skechers. Okay? Essentially, basically, I'm going to read this to you right here. The shoe company, known for its hands-free slip-in styles, has grabbed the attention of enough people to become the third largest footwear company in the world by sales. It's on track for sales of $10 billion without achieving the coolness status that can juice demand for the brand. Did you see that? See where it says there, without achieving the coolness status that can juice demand for the brand. This is talking about Skechers. This is what I'm trying to tell you. I always tell you about coolness. I always say none of those other brands are cool. Kids ain't about to get oh, those things crazy. Unless it's Nike. I'm sorry. And you're not getting complimented for no Skechers. It's not happening like that. I'm sorry. You're not getting complimented for, unless you're a real shoe head, it's not going to happen. But regular people, they need to see some Nikes. They the only coolness brand. But Skechers took a different approach. They actually, look, shout out to Tam. Tam be reading like crazy because she probably even know what this article actually spoken to. So this is what Skechers did. So Skechers decided to go after a market that Nike was not necessarily focusing heavy in. And it says here, Skechers did this by capturing parts of the market that are largely neglected by its competitors. Nike has superstars. Hoka has tapped into hardcore runners. Tech bros are willing to pay up on shoes. Skechers thrives on retirees looking for comfortable kicks and families looking for something affordable for their children. That's basically what it is. They focus on retirees. And they fixated on that market, and Skechers was able to get a great deal of market share by doing that. Now, me personally, I thought about it like retirees, but how many shoes is a retiree going to buy? You get what I'm saying? That's how I kind of look. I'm like, you might buy one or two, but unless they Nike, what you going to have 14 pair of shoes for? So that was a strategic thing that Skechers did. They went away from direct competition with Nike, and they went for a market that Nike was not focused on, which is a great strategy when you know you can't beat Nike in their playground. Where they can't beat Nike in their playground. Yes, Tam, I know they got the money, but I'm just saying older people don't be into collections and they don't be into, I need all these different colors. They are into comfort. But I'm going to still be honest. I ain't seen nobody say them Skechers is hot. I ain't seen nobody tell me, hey, you get them Skechers? Hey, you know them Skechers coming out. I haven't seen coverage for Skechers. I haven't seen analysts really covering Skechers. So I just don't see it. But that they have the capture of the oldest market, which is cool. But eventually, we'll see what happens. I don't know how long they can maintain that or sustain that. But I will say this. I actually see it on a day-to-day process. I look at people's shoes all the time. I'm looking at them like these old people with money, like Tam said, they definitely be having. I be seeing a lot of Hoka shoes with the business people. And then you'll see Skechers with the old retirees. I swear, like this is funny. This article is on point. Now, I'm obviously in an affluent city and all that, but 100% on point. The business people that's getting money be having those Hokas on. I'm telling you, they be in a combo suit with the Hokas on. Like it's really interesting. And then the retirees, when you walk in about, you will literally see them with some Skechers on. So it's a pretty accurate depiction from my region. You guys will have to decide if that's consistent with y'all, but I thought that was interesting. But to see the article talk about the coolness factor that I speak about, I'm just telling you, it's just I just don't think anybody can match that part of the brand. So that's why I've been buying more Nike. I'll be happy to be wrong if I will be. We'll see. But remember, Yeezus himself bought his family some Disney stock and some Nike stock. Now, Yeezus is the artist of our lifetime. So, I'm not making my decisions because of him, but I just think that's funny. Okay. So I read up on that because you have to constantly be reading, constantly know what's going on. But I find that to be interesting. But I'm pretty pretty comfortable with going forward and seeing the adjustments that I need to see Nike make. And I've been seeing some of them shoes that they releasing. Yeah. People gonna be buying them. Them Kobe's that's coming back out. You know they retro those stuff. Yeah, they about to buy them. Yeah, I've been seeing that. Those Grinches and those. Yeah, they gonna be buying them. So more money coming to Nike. They're restructuring costs, doing certain things. So I believe towards the end of Q4 2025, I will start to see good things come from Nike, and I'll start to see it bounce, and I'll start to see analysts start to get behind and start the momentum in the company. So that's when it comes to that. Now, what's next up? I covered these two. Let me see where I'm at. Oh, okay. Yeah, I want to get into this. I got time. Cool. So another thing we need to cover is Disney. Disney is another company that's in the portfolio. They just made quite some strategic moves. Okay. One of the moves that they made was they acquired Fubo TV. In their acquisition of Fubo TV, it put them in direct competition with YouTube TV, basically. YouTube TV is the number one in that market area. And now with their acquisition of Fubo TV and their Hulu TV that they're merging together is a direct competitor to that. Disney did something very, very strategic that I wasn't expecting, but I think a lot of people are not paying attention to what they've actually done. So we're going to cover those things today because they've done some really strategic things that people don't realize will just actually happen. Okay. Another thing that they did pertaining to their acquisition or their partnership with Venue.
Of course not, because it surprised the market. But I would say the minute that Disney bought 70% of Fubo.
Between Disney, Fox, and WBD, it was supposed to launch this year. They had some issues. It's been called off. The Disney Fubo deal just earlier this week had settled the lawsuit that was keeping Venue from the launch. So you thought, well, finally, it's clear sailing. That makes this decision even more out of left field. For more on the news and what it means for the players and for the media landscape, let's bring in Needham Senior Entertainment and Internet Analyst Laura Martin. Laura, am I making too much of this? Welcome.
Of course not, because it surprised the market. But I would say the minute that Disney bought 70% of Fubo, making it de facto a subsidiary of the Walt Disney Company, I think what they were telling you is and they gave up 30% of Hulu Live TV, which is their virtual MVPD. They were telling you they're distancing themselves from the virtual MVPD category, and therefore linear TV. It's just another step showing they're moving towards streaming 100% because they are going to launch the ESPN app, which is a streaming app, in the fourth quarter.
Okay.
So with that right there, Mr. JJ, their streaming business is actually profitable. They have to get control of the margins, which we believe they will be able to. But the first thing I need you to understand is this. The Fubo acquisition did one of two things. One, Fubo had put a lawsuit out to block Venue, right? Which the judge put an injunction on that and basically put a hold on all those type of partnership agreements, right? Because Fubo was claiming that it would impact competition, right? So then, yeah, that's right. So then, this is important. Then Disney did something completely out of left field. They merged their linear TV business with Fubo TV and said, we're going to own 70% of this, and you guys can get 30%. Now, this is why it's important. One, it gets them to drop the lawsuit, right? Which will save Disney a lot of money, because if you know anything about corporate costs, see, like when you try to put your lawyer on retainer, you be like, yo, I got like $50, $100. I keep you on retainer. Corporate retainers is much higher than that. So the cost that they would have to be back and forth into court, and they kind of could see, okay, this might be an issue with the DOJ. So we might have a problem here. It's going to cost them millions and millions of dollars to battle in court. So what they overly did, what they said, we the big dog around here. We the big dog around here. So we going to buy you. But what we're going to do is we're not going to buy you outright. We going to merge the business together. And we're going to let you run the business. Think about this. We're going to let you run the business. So what Disney did ultimately is they did actually a really, really strategic thing here. And I want you guys to pay really close attention to it. One, they took a struggling linear cable style television and aligned it with a Fubo TV that is very popular. A lot of people love Fubo TV. I'm going to say this. Even me, when I be on websites to make sure I can watch a lot of the sports, I see a lot of the sites support the Fubo TV. So they have a stronghold in that area. And so their management, Fubo TV management, is actually really good at what they do, but they were running they were not profitable. Once the businesses merge together, they will be immediately profitable and they will have immediate competition with YouTube TV. Okay. Now, here's the important part. Disney is going to let Fubo's management continue to run the operations because they may be actually more strategic or more innovative in that type of area, or they just may be better at running that type of business than Disney currently is now. And it also allowed Disney to focus wholeheartedly on streaming, while also giving them an opportunity that if they want, if everything goes down, they can just take the L. Fubo TV is worth less than $1 billion, maybe $2 billion now that it ran up 200%. So if they had to just take the L, well, they would just lose to $1.5 billion, $2 billion, whatever the case is. I don't ultimately think that's going to happen. I think it's still going to generate profit for the continuing future, but it's a win-win for them. And at the end of the day, they can just outright buy the rest of the business and sell it off to somebody else. So they have a lot more flexibility. Now, what makes this even worse, this is what makes this even worse. They canceled the venue deal. And the reason I think they canceled the venue deal is this. TNT or Turner, they bring no actual value to the actual team because their rights pretty much got bought up by who was it? It was either NBC Peacock or somebody else stole their slots in their position. They sued the NBA and they might match it, but whatever. It don't matter. The important thing is TNT inside the NBA was their bear cat. Like that was their bell cow. That was the beloved ESPY award-winning show in that business in the sports area. Everybody loves Charles, Shaquille O'Neal, Ernie, all those guys. Well, Disney got them to license the agreement to run that show on ABC and ESPN. So now TNT will no longer run that show. It will be run by Disney. So Disney, in my opinion, manipulated them and got them to give us the only reason we wanted to deal with them in the first place. Because we know people love that dang freaking halftime show. So we had to get them on the venue deal. Now we got the halftime show. We don't really need you on the venue deal. Now we push it off on that linear TV vision. We don't really need to really work with you guys anymore at all. Plus, our streaming business is going better than we thought it would be, and we're getting the hang of things. We getting out. We're going to scratch the whole deal. It was going to cost us too much money anyway. We were giving up too much profit by sharing with y'all in the first place. So it's a genius idea. I really, really love this move. It makes us more lean, and I think shareholders will be very, very happy with the outcome of this. That's what I think is going on.
So they are telling you they are abandoning the linear TV ecosystem, including virtual MVPDs.
I think I understand, but the terms make me confused. So just say what you just said one more time, but without saying virtual MPDs.
Okay, sorry. So basically, sports is moving to streaming, right? And ESPN is going to be the next nail in the coffin of linear TV because it's going to offer a streaming ESPN. Disney just wants to do streaming. It doesn't want to do anything in linear. And what Venue was, it was going to launch a new linear TV sports focused bundle. And Disney's not saying we don't want to do linear at all anymore.
Okay, because I thought, and look at the way we're writing it, it says Venue streaming joint venture called off, but with the way that we're saying streaming, it was really not full streaming.
Right. It was streaming with linear TV where you couldn't pause and start it. It had 20-minute ad loads, which the consumer doesn't want. It was really a way to offer a skinny bundle of linear TV channels, sports focused, but it was predicated on linear TV. And Disney said, we're out. We're going into the app world where you can watch on an app, start and stop programming. We can put sports on there, and it's just going to be us, Disney. We don't care about other people. We're not doing joint ventures anymore.
So right there. So I was on Amazon the other day watching the game, right? I noticed Amazon had some issues with having a perfect picture throughout the game. So at sometimes the screen get a little fuzzy when they were live feeding it. And I said, wow, I can't believe Amazon don't have like a consistent, perfect process for this just yet. So I saw Amazon struggling a little bit with that at some times. But other than that, it was good enough. So remember Netflix did a similar thing, but they had the Jake Paul, Mike Tyson thing. And it did pretty good, right? But this is what you have to understand. Disney is seeing what Amazon has done with their shift to their sports strategy, and they're saying, "Oh, we're not getting every single game. We picking and choosing games. We want the best game on Friday night. We want a Monday game." Oh, and then I saw the little pop-up ad on Amazon that I could scan. I said, "Oh yeah, they serious about this stuff." And then they strategically put in like 15-second advertising, right? And I'm like, okay, cool. I see what's going on here. And so all I see is Disney just watching and saying, oh, that's what we're going to do anyway. We just going to mimic them, but we're going to use whatever we have licensing agreement. And let's be honest, Disney, out of all the people on Venue, Disney had the better market share of sports. Let's just be honest. But to compete with everybody and to lower costs, we were going to make sure that we tied the other streaming people in there so we can cut costs and compete with the tech money. Because tech money, it's hard to compete with tech money. I'm sorry. That's why I'm like, Elon, if your Teslas don't sell, you competing with a Waymo ain't going to go well for you. That's just my estimation, right? Tech money you can't compete with. That's why they stream roll everybody. Because their overhead cost is so different in comparison to other industries, right? So Disney just made the shift. They basically gonna spin off this business, get that off, kind of get it off their balance sheet, and investors will be less turned off by that old archaic business model, and they're going to shift their business model completely into this. ESPN is going to be their standard. To me, it's going to work out just fine. It's going to work out just fine. But they didn't have a need for the Venue deal anymore. TNT gave us the alley-oop when they gave us the award-winning show. So we have everything we want. And you have to understand, during the partnership, there has to be an agreement. There has to be an agreement. How much of this profit are you going to get, TNT? How much Fox is going to get off this bundle? Because Disney was going to get the most from the bundle. So they're like, okay, we want 40%. All right, we give you 30. You see what I'm saying? So it was too complex. They're like, nah, we're going to keep all the profit for ourselves and see how y'all do on your own. And see if y'all can compete with those other tech companies. I think we can handle it. And this is where you're going to start seeing things start to balance out. So that's what I think happened. I think it was a really, really good move.
And so to rewind to the news earlier this week where they acquired Fubo, is Fubo a streaming play or still like a linear TV play?
Still a linear TV play.
So what was the point of that then? I thought the whole point of that acquisition was to kind of settle Fubo's lawsuit against Venue and then move forward with, what they had planned.
No, I think it's to offload the management of the call it a skinny bundle, the linear TV assets into David Gandler, who's really good at running that kind of business. But Disney's like, we're done. We don't want to focus on that anymore. We want to do streaming only with apps in an app store on mobile devices.
That's super interesting. I really appreciate you kind of walking me through this. So the question now becomes, these dynamics have shifted just in the past few months. Venue, I believe, was supposed to launch this past fall. It's only January. So the market conditions have changed incredibly quickly, and they must see significant upside. Because if I'm an investor, I go, okay, well, there's still a big kind of linear cash cow that could be tapped. Streaming is a bigger bet with tougher competition a la Netflix, and I could see investors being a little nervous about that.
Yes, but I think, look, companies have to a great CEO makes a strategic call, and Bob Iger's making at Disney, who runs Disney, is making a strategic call that streaming is the future and linear is dying. So he's getting on board, and he's going to help make that happen because he's the biggest sports broadcaster, and he's going to make it all available on an app on all mobile devices, and you're not going to need your cable box.
Yeah, and Disney, to your point, is down less than Fox and Warner Brothers today. Warner Brothers is down nearly 5%. I wanted to ask you about your top pick, which is actually Roku, and I don't know if that's part of this story.
No.
No, not part of the story. We really we think consolidation has to happen in media, and we're optimistic that the Trump DOJ and
Did you hear what she said? We think consolidation has to happen in media. Isn't this the stuff I'll be preaching about? This is the stuff I'll be trying to tell y'all. Watch for this. Watch for this. These are indicators. Da, 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 da. Now, she's clearly a pundit and an expert in her field. I'm just a regular Joe. But I'm just saying sometimes you know some things. Sometimes you know some things, all right? So I am very, very happy with the acquisition of Fubo TV. I think it's very strategic. I'm glad they called off the venue because I didn't want to lose points on the package. I didn't want to lose points on the package. I didn't want to give up points to Fox and TNT when they were not bringing as much assets as we were bringing to the table, okay? So people, listen, I'm glad people are turned off by Disney right now because when Wall Street finally says it's a go, y'all going to see it. Y'all going to see it. I'm actually hoping it goes down in the short term. I wish it would go down even further. Go down some more so I can buy some more. But that was a very, very strategic move by the CEO. Those are decisive plays, risky plays, but you have to make them because these are make or break decisions where you have to go, okay, this is weighing down on our business. We have to make a move. This. You have to make a move. Bam. So I like these moves that Bob Iger is making. I think we're starting to create the story again. We're starting to get closer to the atmosphere. Movies are doing well. Simba beat up Mufasa, all that good stuff. And so I'm feeling real good. I think profit is going to be better and better. I still believe y'all still love going to Disneyland and Disney World. Yeah, I mean my niece just turned 3. She loves the goddamn Mickey Mouse and the Minnie Mouses and all them and all that stuff. And they like the little ears that the mouses be. So it is what it is. So I anticipate good things as we're going towards the future, okay? Let's jump into TikTok real quick. Because as you know, the TikTok ban is essentially going to be here on the 19th. And we want to see the opportunities that TikTok's downfall can create for us. We want to see the opportunities of TikTok's downfall, what they can create for us, okay? Let me pull this up here.
The fate of TikTok. By the way, let's watch markets here as we've gone green. The fate of the TikTok ban will soon be in the hands of the Supreme Court as it prepares to hear arguments on Friday. As today's one of the TikTok shop's e-commerce rivals, Whatnot, secures a massive new funding round. Deirdre Bosa has some details from her exclusive interview with Whatnot CEO in today's Tech Check. ID.
Now, I'm going to just say this. I don't know what Whatnot is. But because the void that TikTok will create, Whatnot is saying, tag me in, coach. Put me in, coach. So I find that interesting. I need to start reading up on them so I can figure out what the heck this Whatnot is. Yes, Kevin O'Leary was talking about buying TikTok. Kevin O'Leary ain't got that kind of money, Gurkha. Kevin O'Leary ain't got that kind of money. He would have to get a bunch of investors to go in with him. He ain't got that kind of money. What they would want for TikTok, and TikTok is, and this is my opinion, to me, TikTok is worth at least, if they got everything, at least 50 billion. At least 50 billion. It's probably worth 100 billion, and the valuation is probably 250 billion or something like that or more. But it's worth at least 50 billion to me. So I don't think he got them caught in pocket, so he not gonna buy it. He gonna have to get a group put together for him to be able to do something like that. But I like Kevin O'Leary. I like his business mind. I like his risk versus reward. So when I listen to Kevin O'Leary, I go, he's really sharp. He doesn't take heavy risks, and he leaves a high upside. And so I like that about his mind, his business mind. But he ain't got these kind of pockets. He ain't got them kind of pockets. But what is it? What not now is in play because of TikTok is going downhill.
Hey, good morning, Carl. So if TikTok Shop introduced American users to live stream shopping, Whatnot has also been making inroads, and it's ready to seize the opportunity should TikTok go away. Now, the LA-based startup this morning announced new investment at a $5 billion valuation. That is a 34% jump from its last valuation in 2022. It is also a rare non-AI startup attracting big dollars in the current venture capital landscape, which has been especially tough for e-commerce. Now, we spoke exclusively with Whatnot's co-founder and CEO, Grant LaFontaine, who said that it's not just AI companies that can build strong businesses.
Wait. Let me make sure I understand. So Whatnot is like a live streaming shop? Oh, I seen that one video. That one lady was like selling things like super fast, and it was selling out. Is that what that is? Yeah, this one lady, she was dressed up, talking super fast. This cost it sold it. Is that what this is? Oh, that's crazy. Okay, so then so this, I don't know. I don't understand this very much, but I did see something like that, and it was fast. They sold it hecka fast. It was like QVC on steroids or something like that, right? It's interesting. I don't know if I would want to buy something from that, but I never know how the continuously changing landscape would evolve to something like that. But that's interesting. But Whatnot secures more money. They get more money. And this is the CEO. As you can see him there, he's positioned there with the glasses that we like to see. Okay. It looked like he might be wearing some Apple products in his ears. Clearly in his background says nerd. Hey, look, this business might be booming. Listen, he got all the criteria, my people. He got them all. The glasses, nerd, probably ain't got no kids, no wife, no nothing. Sleep in the building every night and just only do this business, okay? That's all I want to hear about. I don't think he will have an ability to impact TikTok's stay because he won't be in office at the time. But yeah, I don't think he's going to have any say. So a lot of the pundits say they don't believe he's going to have any say so as well. And I think the administration that's going out, they want to be able to get everything done using every hour of power that they're in to have it done under their administration. So I don't think he'll be able to stop it, but we'll see what happens. I think he can reverse something, which laws takes a while to reverse. But I think he can actually also. I think he can also adjust some of the criteria, and then those executive powers and executive orders and all that kind of crap. who knows what could happen? We at these last 8 years of our lives, we didn't seen everything. We didn't seen all kind of stuff we never seen ever happen before. Okay, so keep your ears open. Rilla says, "L gonna spot the money in investment opportunity." Listen, all I'm saying is we just paying attention. I can't see those sneakers that he got in the background. What video game is that in the background? I can't see those sneakers. I wonder what kind of sneakers those is in the background. I can't tell. But let's hear what the CEO has to say.
This like meme in the world that maybe like consumer is dead or some of these other segments of the market aren't doing particularly well. And, you know, the truth is at the end of the day, if you're creating a really great business, consumers love it, and you have a strong underlying business model, you're able to go and raise capital. And, you know, it's not just AI companies that can build really strong businesses. Nothing's changed.
Now, this round, which was over $200 million, the evidence of that, and could also suggest that investor interest in consumer brands is recovering for the right company, of course. LaFontaine told me that Whatnot doubled sales to $3 billion over the last year and does have a path to profitability, though it's not now profitable. In public markets, too, guys, there's also eBay today at a 52-week high after announcing a partnership with Facebook Marketplace. Now, Whatnot has actually been around longer than TikTok Shop and doing live stream shopping. You can see an example of it here. But TikTok's reach has helped it become much larger in terms of sales, really eclipsing Whatnot. When I asked Grant if he saw a potential TikTok ban as an opportunity, he said, sure, they can be a home for buyers and sellers looking for a new one, but otherwise it's business as usual.
Yeah, I don't know how popular that is, guys. You buying stuff live. I don't know how popular it is. It's interesting, though. It's interesting to start to see the sharks smell the blood in the water of TikTok. You guys know on the 19th, what day is it? Somebody pull it up. What day is the 19th? I ain't playing with y'all. What day is the 19th? What day is the 19th? Let me see here. All right, that's some BS. So the 19th is on a Sunday. The 19th is on a Sunday. I believe we have a holiday on the 20th. So listen to me, boy. If that ban happens on the 19th, Meta to the moon. That's all I'm gonna tell y'all. Listen, where we at? 700, the 700 mark. That threshold is going to shoot up there. It's going to shoot up there. I'm telling you now. If that bad happens, $700. We going. Okay. And then after we see Q4 results in Q1, I'm telling you now. It's gonna run up. If y'all don't realize how much money they spent on the administration's spent on all this advertising, oh my gosh. I cannot wait to this earnings report from Meta. Oh my gosh, it's gonna be beautiful. It's gonna be beautiful. And the printing machine is just gonna print some more. That's my estimation going on with there. So this could be the perfect runway. I don't necessarily believe that it's going to be that simple and easy, but if it happens, man, oh man. I'm telling y'all that now. If that happens, guys, to the moon, guys. All right, so let's get into travel. Okay, you guys may be familiar with Delta Airlines. Their CEO recently did an interview. I want to get into that as he talk about their success and expectations going into the future. Why this is important is the primary thing we're looking for is consumers. We always watching what they doing. Now, you know that your boy, you got Pocket watching with JT. Shout out to him, but he really be like spying on people and catching people doing some crazy stuff. What we is doing is just watching behaviors. We seeing where the money go. Because listen, when you see where the money go, then you can position yourself to be where the money at. I'm going to say that again. When you see where the money go, you can position yourself to be where the money at. So One of the things we're looking for, the strength of the consumer. We're looking at the actions and behaviors of the consumer. And my thing has always been heavy on younger people and their drive for vacations, their drive for memories, their drive to live life is going to make us a lot of money. Okay. And we just saw the airline industry go upside down. And now they're pretty much firing at all cylinders again. So I find that very interesting. So we're going to get into the CEO over at Delta, and he's going to break down what he's been seeing and what's going on his side of the world. And I know a lot of you guys like to travel. So I believe Delta is the best airline that we have in the U.S. I prefer to fly Delta when I can. I don't really fly a lot because I don't really like being on the airplane. I do fly more Southwest when I go to Vegas because it just happened to work out that way. But when I take longer trips, man, it's definitely preferably with Delta. So let's get into the CEO and see what they got for us.
Quarterly results. Let's get to Phil LeBeau, joins us with a special guest. Good morning again, Phil.
Good morning, Joe. Ed Bastian, CEO of Delta. Thank you for joining us on a day where you guys beat the street on the top and the bottom line, and you really saw an acceleration in demand after the election. Tell me in your own words what you saw.
We had a strong close to the year. Record fourth quarter profits. Team did an amazing job with respect to the operational performance, particularly during the busy holiday periods. Led the industry across the board on that. The brand is healthy. We're seeing a lot of momentum. Advanced bookings look great into the new year. And yes, once we got through the election season and there was clarity, demand came across the board, whether it's internationally, whether it was corporately, whether it's consumer. Premium led the way as usual.
And you know the discussion that's out there right now regarding your stock and other airline stocks. You're all close to all-time highs. And the discussion is, do they deserve to be re-rated at a higher multiple? The skeptics will say, look, this is the head fake we've seen from this industry time and again. When do you get to the point where you can say to Wall Street, it's different this time?
Well, we're looking next year in 25 at our all-time best year in our history. So to me, this is a sustained momentum that we built. If you go back over the last decade, we've been building strength. Obviously, COVID hit us really, really hard. Yep. But we're back and we're better than ever.
And it's sustainable.
And it's sustainable. The themes that we had for last year's investor conference that we did in November was around differentiation and durability. Delta clearly is differentiating itself across the industry, leading the industry in just about every metric you can imagine, particularly in the consumer health. And durability, we're going to generate this year over $4 billion in free cash flow, which we're going to use to continue to improve the balance sheet. I think one of the challenges you've had with the re-rating comments are that there's never really been a enterprise leading, financially durable franchise in this industry. Delta's going to be that. And I see over the next 2 years us clearly achieving that, which will lead to the re-rating of Delta at least.
Excellent job, Ed. Ed did a great job of selling his company. I believe they're the industry standard. When you look at on-time departures, I believe they're number one in the industry. They are the ones that when they say they leaving, they leaving. They beat everybody. I believe they're number one in the industry in departure time, which is one of the huge indicators that they use in the industry because everybody hates delays. Everybody hates not moving on time. People got places to be, and they're best in industry to me. Always have an enjoyable experience when I'm on Delta. So I really do like the CEO as far as his demeanor when it comes to speaking about the business, and he's done a phenomenal job at, to me, separating his business from everybody else's and weathering all type of storms. So he's really started to move the industry in a way, and I believe he's like, if I had to take any bet on any of them, it would be this guy. It would be this particular company. And although I'm gonna be honest with you, I don't trust them. I don't like what happened and how they almost went to zero. But other than that, because it was a once in a lifetime type of experience, I believe he would be the guy for it.
and you look at the differentiation, you just had CES celebrating or marking the beginning of your 100th anniversary. Right. And you're talking about new partnerships, whether it's with Uber, YouTube, DraftKings. How long before those start to gain traction and you can say, look, here's the difference it's making, not just to the brand building, but also to the bottom line?
Well, it's already working, and all those partnerships that I mentioned at CS that we had the other night, they're already going to start taking effect this year, starting this spring. So whether it's YouTube, whether it's Uber, and it's building on the experiences that we've been creating. But we live in the experiencing world, the experience economy, and the health of our experience for our consumers has never been stronger, and as a result, the demand's never been stronger. So we're going to continue to personalize. We talked about Delta Concierge, which we launched the other evening. It's going to be about how do you personalize that experience for consumers to make it as seamless as possible, driving innovation all the way from home to your seat, and the entertainment, the loyalty dynamics that go alongside it. We have the next century of flight to look to, and I could not be more optimistic in terms of what I'm seeing.
And I also think that their brand is the design of their brand. Their symbol is the best looking symbol. I know that's something like we kind of look over, but when you look at branding and marketing, the symbol, the little Delta thing, I think it's the coolest one out of all of them. I think it is. They're really smashing numbers. And going into projection, as he's saying, he believes towards the end of the year and next year will be their greatest performance in history. What does that tell us, y'all? That tell us that there's going to be either more flights, they're going to raise prices, they've got some technological advances that we've never seen, but it tells us that the expectation is to be more travel, to be more movement. And so I really, really believe that's going to be the case because unfortunately, I shouldn't say unfortunate, but we're in an atmosphere where enjoying your life, traveling, all these things are very much high in demand. And then also, people have been able to find a way to monetize a lot of this travel. So, vlogging is still a big deal, like traveling couples and all that kind of stuff. So it's just getting bigger and bigger. The advertising, the companies, things like it's just getting bigger and bigger. So I really see them actually being able to really dominate that market. But this particular industry, I couldn't say I understand enough about the company for me to be like, yeah, I'll go ahead and just jump right into it. I wouldn't say that. JJ says he didn't say anything specific. I agree, JJ. He didn't. He did not. But the numbers say enough. The numbers say they get the money, okay? But he did not give any specific, and it's mainly because they didn't ask him anything specific. They didn't ask him about costs, fuel cut costs, placement, passengers, fees, transfer, any of that kind of stuff. They didn't ask anything about it because that one blonde hair lady that usually asks the best questions, she ain't there right now. If she was there, we would get better questions, JJ, but she's not there right now. So all he's doing is promoting the company, gloating about their results, and basically not saying much that can get him in trouble, but just saying enough to kind of build up hype. But somebody like JJ clearly won't let it slide.
Century will include new aircraft.
Yeah.
You've got what, about 40? Did you say A350s?
We have 40 Airbus planes coming in 25, including some 350s.
Are you comfortable with their ability to meet delivery, given the supply chain problems? Do you feel like them, and we know what's going on with Boeing, it's a separate issue, but the supply chain is to the level of strength that it can meet the demand that's out there?
Airbus has done a very good job over the last 10 years, hitting their targets with Delta. We're a priority customer for them, and we'll continue to receive that equipment, I'm sure, relatively on time.
We've got a new administration starting in a couple of weeks. Have you talked with President Trump, President-elect Trump?
Well, I'm not going to talk about any personal conversations I've had with the incoming administration, but we as a firm always provide support through the transition process with the next administration, and they've appreciated our insights, and we'll see where things go.
Give me
Well, why you don't want to talk about it if you talk to him? Because it's politics as usual. You can say we've had conversations. You ain't had to. He didn't ask you. All he said was, "Have you talked?" You could have said yes. He didn't tell you to tell him what y'all ate for breakfast. But nah, yeah, man, you politicians, man, I swear. Man, oh man, one day, if I ever get enough power, I'm putting limit terms on everybody that's in Congress. 4 years and y'all done. 8 years, forever y'all done. Y'all ain't. I'm not doing this with y'all. This is crazy, man. Like, I'm so sick of this stuff. They better not ever let me get no Elon money. Man, the first thing I'm doing is buying a new Congress. I'm getting rid of these people. Man, it's kind of sad. It is kind of sad to watch this type of stuff play out. All he had to do is say yes or no. He didn't ask you specifically what you talk about. But I guess there's something about acting like you don't speak to, like, you don't want to say if you're a Republican or a Democrat, whatever it is. It's just sad. But I understand the point of being neutral when it comes to business to make your money. It's just dumb. It's kind of dumb to me.
Quick snapshot on the consumer right now. International, corporate, premium.
Well, all channels are really strong, and that's what led to the great fourth quarter that we had. We're looking in the first quarter close to double digits in terms of top line revenue growth. We're looking at doubling our EPS in the first quarter. We're looking at next year being the top financial performance in our history. You've got corporates up double digits. You've got the international up close to double digits. You've got our American Express loyalty remuneration and spending at double digit levels. So every aspect that we're putting out, again, many of these in premium categories are really, really healthy.
And the industry.
So the first thing you have to understand is that all he said was, is there any categories that stand out? Well, across the board, we doing our thing in all of them. It's usually one area where it's better than the others. You have those metrics, sir. You could just tell us. But, man, he's doing a little bit too much. Now JJ got me over scrutinized. I'm like, man, he's doing a little bit of too much of this. They are kind of like a premium airline, I guess. And JJ was right in the sense of they are using their connection with Airbus. Honestly, Airbus is doing way better than Boeing right now. Everybody. I could sell more planes than them at this point. But, you know, I will say this. To me, airline industry is boring. It's a boring company. And to me, the reason why I would hold back on making like a large investment in them is because it's too much customer interaction all the time. So you got people with cell phones that can just take out a camera and then record your employees maybe arguing, maybe not being nice, and, you know, secretly record them and then put them online, make social media blow up, which will drop the stock. And you know, it's just so many things that I just don't like, that could go wrong, and it would be something I have to think about too much, and it wouldn't just be something I can put on like autopilot and be like, yeah, that industry is just gonna boom. It's just too much up and down for me. But for anybody else that feels very strongly about travel and air and airline industries, to me, these would be the ones. Delta would be the people I would say so, in my opinion, that are probably going to be the winners, one of the top 3 winners, but probably number one in my opinion. So he pretty much said that exactly what we are expecting. Demand is strong, travel is high. They're raising prices. They're going to grow top line double digits, EPS double digits. These are really, really good things. So for EPS to go up like that, they're probably buying back shares, and then they're increasing revenue that way. So it's a relatively good quarter. They've done well, but the industry itself, I don't know if it's something that I would actually touch. Okay. Let me see. I got a few more minutes. Let me get into this report from NVIDIA real quick. Let me get into this report from NVIDIA, because as you know, NVIDIA in particular, there have been reports about their chips being banned, and, you know, our current government trying to prevent other companies from having access to NVIDIA's supreme technology. So I want to pull up that report real quick, or at least that segment. Hold on. Let me pull it up real quick. Hold on. There we go. I got it. JJ says, if you think Delta is dope, hop on an Anna or a... I can't afford those flights, JJ. What's wrong with you? I had to buy a whole island in order to get on one of Qatar's airlines. They got like a hotel room up there. So yeah, I can't afford those. I like Delta. I can't afford to get on that one too often. So I usually be on Spirit or something. I'll hop on the Spirit airline. You know what I mean? Give me one of them economy tickets, you know. Hey, look, don't fake it till you make it around here. Mom's basement is only saving me so much at the time, JJ. It's only saving me so much. Let me pull this one up here. NVIDIA.
The Biden administration reportedly set to announce a new set of last-minute expansive chip export restrictions today. It's a three-tiered system that would put new caps on AI chip curbs depending on the country and the company. Deirdre Bosa has more in today's Tech Check. Deirdre, explain this for us, please.
I will. And in doing so, I'm also going to ask, how successful have the current restrictions been? The export ban did prevent China from getting the highest end American chips, but it did not stop China from catching up in the AI race, proving that necessity is the mother of invention. Now, despite not having access to NVIDIA's best performing GPUs, a Chinese research lab called DeepSeek was able to build an AI model using dumbed down GPUs that beat OpenAI's GPT-4 on certain benchmarks. That just shocked the AI community. Here's what Perplexity CEO Arvind Srinivas told me.
So remember, Bulla, what's good? JJ stupid. JJ, why you didn't get me no ticket then? Dang, why you need to fly on those airlines by yourself? You're selfish, JJ. You're selfish for the new year. I'm embarrassed of you. You could have got me a ticket so I could see what that airline is like. So Perplexity CEO, if you guys are unfamiliar with him, he's basically in the AI space. They basically you type in, they have the AI engines, you know, they do search and all that kind of stuff. And, you know, you ask a question, hey, and they answer your question. That's all. So the thing is about and we'll hear what he has to say about NVIDIA and the lead and all that, but that's his industry. And he has the glasses on that we like to see, and he clearly is awkward enough to run this business, okay? The administration is trying to prevent anybody else from winning this AI war. So they're putting restrictions on exports of NVIDIA's chips, and they're trying to get NVIDIA to prioritize American companies. JJ says AI do more than that, man. JJ, I don't know as much as you. I'm just giving a simple response of what it is to a small degree and to get in the video. I'm not an AI expert. If I was, JJ, you think I'd be on here? I would type an AI version of myself, pre-record myself, and then I don't even know if I need to pre-record myself. I would have an AI version of myself with a hologram running the stream instead of me actually being here. So that way I can be on the airplane that you promised me a ticket in, JJ. You promised me a ticket. I want my ticket, JJ. But in all seriousness, they are trying to make sure we win this war. They are trying to make sure that we don't lose to China, basically. They're trying to make sure that we put a barrier in place to stop them from beating us. So they're just taking all the steps that they can to ensure that we get a victory. I don't know if it's enough. I'm sorry, JJ. I need to stream every week, JJ. JJ, you're going to have to remind me. You have to stay on me and say, hey, bro, where you at? You told me you was going to stream. I know, brother. I got to figure this out. I got to reassess all my time and reallocate everything. And I'm trying. Trust me, I really, really am. There's too much stuff going on at the beginning of Q1 for us right now. But still, I don't believe we will be successful at stopping our exports, but I believe we'll put some barriers in place. Maybe that'll help. Maybe it'll help.
But the reality is some of the details in DeepSeek V3 are so good that I wouldn't be surprised if Meta took a look at it and incorporated some of that in Llama 4, right?
so advanced that our best American companies could use it as a blueprint. That is a shocking statement. In other words, the existing chip restrictions, they did nothing to slow down China's pace. It only made them more creative and more efficient. They backfired. Other Chinese labs are also making major strides in efficiency with limited resources. There's Kai-Fu Lee's 01.ai and Alibaba's Q1. There's others. The export ban on China has also led to smuggling and loopholes. A report from The Information said that TikTok owner ByteDance and other Chinese companies rented high-end GPUs through American cloud companies to get around restrictions. Another report from Reuters a few months ago said that TSMC chips were found on a Huawei product. So creativity here in a different sense, forced again by those restrictions. So it begs the question, by expanding them, what are you really achieving? And this is a point that NVIDIA took up in its response to those expected expanded restrictions. It calls them a last-minute policy that would play into the hands of U.S. adversaries. And this is pretty uncharacteristic language from NVIDIA against the current Biden administration. It also echoes an Oracle blog post from just a few days ago that said that the export control framework will go down as one of the most destructive to ever hit the U.S. technology industry, and, quote, says we don't need a ride. We need government to get out of the way, which will.
You know what's so funny about this? To hear all of these people talking about on their way out how they taking shots at Biden is hilarious. But you hear all these business people like, yeah, get out of the way, get out of the way. And they're putting their chests out now because the incumbent president is making them feel good, is making them believe that they're going to be able to exercise certain opportunities and have less restriction than previously put in place. We'll see how that happens. But I do agree, government is always in the way, JJ, and that ain't going to stop. It ain't going to stop. They're there to give reassurance to people that rely on the government, as I did when I was a young baby. I was a government baby. I needed those resources to survive. So, it is what it is. But these regulations are hurting our innovation, but I just don't know if the restrictions are going to give us the lead that we need, because basically what they did was they took a lesser chip and we're still outperforming some of our AI models with a lesser chip, and we have the better chip. So I don't know where the impact is going to actually be. I don't know if we're going to actually win this battle. I'm an American, so I personally feel like we always win, but the tide could be turning, guys. The tide could be turning. I don't know. We'll see. Okay. As we get into this year, I'm going to try to be as consistent as I can, especially around this show. Actually, that's really all I really like talking about right now, to be honest with you. And actually, I've been getting more sleep. I've been less online at all. I don't know what nobody else got going on. So it's good. It's good. But I do need to get back in the thick of things. And JJ on my line about it. And every time, JJ always on nightcap. He don't never talk to me. He don't never talk to me on nightcap. Anyway, guys, hope you guys enjoyed the show. Right now, it's not too much movement going on because there's not a lot of earnings reports coming out and a lot of things moving early in the year, still having some shifting going on. But we're going to stay up to date. We're going to stay watching. We're going to stay learning. And we're going to stay making sure we share the information with each other and keep pushing each other in the right direction. Guys, stay consistent. If you find something and around your investment decisions, man, guys, please stay consistent. Please just follow the process and don't try to dip in and dip out. It ain't going to work. All right. So it is 10 a.m. on the West Coast, means it is football time for you guys. My team don't play for a few hours. So I'm going to chill. I do need to catch up on a few things. I need to possibly return a couple of these emails. I appreciate you guys for tuning in. Make sure y'all hit a like or a dislike button on the way out the door. And until next time, we gone.